It's Thursday, ladies and gentlemen, so you know what that means. Welcome back for another daily market update where we cover all the latest and greatest things happening in the crypto space, but also the broader markets. And that's exactly what we intend to do in this video. We're going to start things off with the events of yesterday. We did have the Fed rate decision and, of course, Jerome Powell's statement following it. And actually, I think there was some disappointment around the size of the rate cut. I would prefer that they go in smaller increments because this is going to be akin to prior times like the 90s where they've actually brought rates down in a slow, measured approach, not due to catastrophes like 2009, the 2000s, or the 2020 sort of lockdown scenario. As long as we don't have one of those scenarios, rate cuts do not equal catastrophe. And actually, I think they're going to support the environment for assets. Certainly, you guys know I believe the S&P is now in a bull market, and we've had our bear market. That was on the back end of Trump's tariffs. I also think we've had what many people are still waiting for, the yield curve uninversion play out. I think that has played out, and that was the 20% pullback we got in the S&P off the back end of Trump's tariffs. Again, it's akin to the 90s where you had a 20% pullback after the yield curve uninversion, and that was what the inversion was essentially signaling. We've had that. So I think it's clear skies ahead. Of course, we pay attention to the macro picture. The reason being is because really crypto is a beta of the likes of the stock market, the US stock market certainly, which we think is a good time ahead of it. Crypto will outperform it being a beta to it. So Fed meeting recap. Fed Chair Powell calls quarter point trim a risk management cut. And I'm actually glad that they've done this small increment. The reason being is because a large one would show perhaps worry, concern economically, in my opinion. And I would rather they took a measured approach than a straight down one. You typically get, and I'll show you this, we'll dive over to the Fed funds that we've got here in black and the S&P 500 in a kind of a reddish color, almost like a scarlet color. Every time they lower interest rates rapidly, the reason typically is because you have 2008, like what we had here, or you have the dot-com crash, or you have down here the lockdowns. A more measured approach, I believe, is akin to the period that we had starting in 1995, really all the way up until the dot-com crash, a kind of more incremental approach. And that, I believe, is going to see markets do a similar thing, which we're expecting based on the S&P having engulfed its bear market. It's 20% pullback. Every time historically it's done that, it's gone on to rally for a period of years plus. And we're expecting that. I think your bear market's done. I think all the people expecting risk to play out or a catastrophe, they have been wrong thus far. I think they're going to continue to be wrong. And I think they're going to be waiting for something that doesn't occur. And being perhaps too cautious. There's always reasons to not be in markets. More people have lost money sat out of the markets than actually partaking in them. And when you have the backdrop of an inflating fiat system, which is why we're so zealous on this channel that you guys should be investing, it provides a real sort of stable ground to put your foot upon. So really it was, I think, lackluster. I think the market sold off on the back end of this slightly. I get more happy when markets sell off than when they rally, certainly the crypto markets, because it gives me longer to accumulate. I'm that confident in where this stuff is going. But I think people very much expected this. It was very much priced in. He's saying you can think of this in a way as a risk management cut, Powell said. He added that a very difficult picture of risk has emerged as the labor market has begun to cool off versus the threat of inflation in the front. The central bank had been holding firm on interest rates as inflation has remained above the Federal Reserve's 2% target. Powell has expressed concerns that tariffs put in place by Trump's administration could lead to price surges. The Fed chair said companies have been slow to pass costs from the levies onto consumers, but he expects the impact will build over the course of the rest of the year into next year. But what's the outcome? Do people stop buying things? Do they stop consuming? I think they're going to alleviate some of those costs with a weakening dollar. The only issue is, as a consumer, your wage probably hasn't inflated to the same magnitude that the dollar has devalued due to its inflation, predominantly via the debt markets. There's a great shift going on at the moment, isn't there? And you need to be on the right side of that, the right side of history, otherwise you're going to perhaps fall casualty. So I don't want to bang on about this all daily market update because we've got some pretty huge news in regards to the SEC setting out a general framework for approval of the ETFs. We're going to look at that. We did say these were coming. They're likely coming, in the next month or so, I think. And this is in line with some of the largest ETP providers in Europe that we have great relationships with that are kind of expecting that. They also have their foots in the American market, which is where 95% of kind of volume and capital is. That's why this is so significant. I think we're looking at a spectacular end to the year. October, November, typically the most bullish months. If you look at what crypto did last November and we were positioned for that, I think you're going to have a repeat of it. I think this is going to see some pretty sensational things. I want everybody on board for that ride. So the Fed funds rate's moving forwards. The next rate cut is supposed to be coming in October, 41 days away. This is another 25 basis point rate cut is what the markets have picked up, or the CME is looking at based on Jerome Powell's speech yesterday. Then in December, they are looking at another rate cut. So we're looking at potentially 3 rate cuts from now until the end of the year. And then, interestingly, going into 2026, they've got rates sort of staying a little bit stagnant in regards to being favorable. Certainly for the January decision, the March decision, another rate cut. This is a more measured approach like what we see here. Because rate cuts don't always signal turmoil unless there's already turmoil in the markets, and the reason they're cutting rates is to address that. As long as we don't get that, I think it's plain skies and sailing ahead, guys. I really do think we've got a great time ahead of us for the markets, certainly the cryptocurrency markets, which we are now going to come on to. My macro take. Do become a Patreon. Watch last night's live meeting. We saw the rate decision in. We also, discussed a load of sort of macro things around it and really, I guess, presented what I'm calling my macro market theory. And when you can correlate markets together, you get a real good picture. And hopefully we're presenting that also on here. Let's talk about the cryptocurrency space now. We dealt with the kind of macro side of things and what I think is going to happen. Eric Balanchunas, great guy to follow along with James Seyfarth. He says here, boom, SEC has approved the generic listing standards that will clear the way for spot crypto ETFs to launch without going through all the BS. We don't need to say what that stands for every time under the 33 Act, so long as they have futures on Coinbase, which currently includes about 12 to 15 coins. Now, isn't that interesting? Coinbase was a stock that me and my community were buying literally $40, $50, $70 I think is my average entry. We're up hundreds of % on that. This is the thing. A lot of people really struggled with this market given the choppy kind of crazy nature of it since we got back in at the start of 2023. We've been killing it, literally, whether it's stocks, whether it's cryptos. It hasn't always been plain sailing. There's been a lot of chop to get to where we are today, but the idea and position that we have has broadly been right. And, do become a subscriber to the channel. So this is interesting. He's highlighting here, order granted accelerated approval of proposal rule changes, adopt generic listing standards for commodities. It's interesting they're essentially saying that, one of the kind of prerequisites is them having futures listed on Coinbase. It shows you how integral Coinbase is to the system. This, of course, is from Hester Pierce. She says, and she is an SEC commissioner, the SEC approved generic listing standards for commodity-based ETPs, including spot crypto ETPs. This is from James Seyfarth, great guy to follow, by the way. Here's a statement on the crypto ETP generic listing standards. A special generic statement on commission approval of generic listing standards for commodity-based ETPs. Today, the commission approved the generic listing and trading on 3 national securities exchanges of certain commodity-based exchange-traded products, ETPs, including ETPs holding crypto asset commodities. Generic listing standards eliminate the needs for prior SEC approval ruling under Section 19B of the Securities Exchange Act of the 1934 Exchange Act for each individual ETP. Instead, if an ETP meets the generic listing standards, an exchange must post certain information on the website regarding the ETP within 5 business days after the commencement of trading the ETP. The streamlined listing process will benefit investors, issuers, other market participants, and the commission by reducing the time and resources required to bringing new ETPs to market. This is good. They specifically obviously put provisions in for the cryptocurrency space. I think this is part of the broader sort of plan of Trump and his administration to kind of deregulate. That was it. You know, we've actually said we've given a positive outlook on Trump's America from a market point of view. Other points of view, we're not here to debate. I'm not interested in debating it. Everybody's got an opinion. Remember that, guys. Not everybody's, I think, is worth listening to, but many people's are, and kind of coming up with that collective. Anyway, after notorious delays and judicial prodding, the commission had previously provided an initial path for an exchange to list spot crypto-based ETPs. Specifically, the commission issued orders stating that an exchange could meet its obligatory obligations under the Exchange Act Section 6B5 by demonstrating that the exchange has a comprehensive surveillance sharing agreement with a regulated market of significant size related to the underlying or reference asset, because such an agreement would assist in detecting or deterring fraud and manipulation related to the underlying asset. Market participants for crypto-based ETPs expressed concerns with this standards. Today's approval order addresses these concerns by providing alternative rules-based eligibility criteria for the underlying holdings of the commodity-based ETPs, including crypto asset-based ETPs. To be eligible holdings, or to be an eligible holding for an ETP under the new generic listing, the commodities may trade on the market that is an intermarket surveillance group member, or under the, this is where Coinbase come in, I believe, or under the futures contract traded for at least 6 months on the CFTC regulated designated contract market. Alternatively, if an exchange traded fund designed to provide economic exposure of no less than 40% of its net asset value to a commodity lists and trades on a national securities exchange, ETPs that provide exposure to the same commodity also can list and trade on the exchange under today's approval generic listing standard. Currently, exchanges do not have to go through the protracted Exchange Act rule exchange under the 19B4 review process for such ETFs, given the existing generic listing standards that the SEC approved in connection with the adoption of the ETF rule under the investment company. Today's generic listing standard afford the same treatment to cover commodity-based ETPs. An exchange still must submit rules, so on and so forth. We've read the gist of that. So they're essentially saying if you've already got approved sort of futures contracts under the CFTC, you'll be allowed to, for 6 months, you'll be allowed to essentially go ahead with your ETF, and they'll be allowed to list them. We did look at DTCC, and we said this is a great clue that they were going to get approval soon, actually listing a number of ETFs, including HBAR, XRP, so on and so forth. So this is huge. This is what I think Eric Balanchunas means when he says that a kind of prerequisite is being listed on Coinbase for a certain amount of time, and there's sort of 12 to 15 coins that are included in this. Here's the list of those 12 to 15 coins, by the way. Bitcoin, Ethereum, Litecoin, Bitcoin Cash, Dogecoin, Polkadot, Avalanche, Chainlink, Stellar, great to see our boy there, Solana, Hedera, Cardano, XRP, and that's the kind of list that he's giving. He also did an interesting tweet where he said, this is such a good point. The last time they implemented a generic listing standard for ETFs, launches tripled. Good chance we see north of 100 crypto ETFs launch in the next 12 months. He said, this is from Matt Hudgden from Bitwise. Anybody who knows this individual, let's get him on the show. What impact will generic listing standards have on crypto ETP space? Here's what happens when the SEC passed the ETF rule in the late 2019s, which created generic listing standards for traditional ETFs. The pace of ETFs launch rose from 117 in a year to 370. Expect the same kind of expansion if generic listing standards come to crypto this fall. And they are here. This is crazy. What's about to happen. And this is all taking place in terms of a fundamental narrative at a time when the cryptocurrency market is on the cusp of breaking out into price discovery in the form of the overall market versus or excluding Bitcoin. One of the few people that look at these charts technically, and I believe this in a cup and handle. We've released a cup and handle course, And I think this is going to, then that should give you all the confidence you need in regards to this pound. And that's going to take you to 6.3 trillion. Also, Bitcoin dominance we think is very much in what we look at as phase 4. Schematic here. We do teach all of this stuff. Markets are very kind of, they repeat. People say they don't repeat, they rhyme. No, they literally repeat in regards to their structure. That's certainly my technical take. So we think when it walketh, talketh, and quacketh like a duck, we're going to call it a duck. We've got a great, I think, macro backdrop that's going to support the cryptocurrency space and see it act as that beta that it is. And we've got a great technical setup, a great fundamental one. Guys, you're in for a good time. And we're correlating that, bringing it all together. Thank you very much for all the support we're getting off you guys. I'm going to love and leave you on that note. Thanks, everyone, for watching. And I'll see you all in the next one. Thanks a lot, guys. See you soon.